I want to go over the latest for gap fill and reverse. This is a strategy that you get in our book, Algorithmic Trading Systems, but you get the crude oil version free on the website. If you go to capstonetradingsystems.com, you fill this out, you get this free chapter that shows you how to set it up in crude oil. And so many of you have this. I want to show you the latest results on this for the default settings from the book. And we're looking at it in MultiCharts. And look at the latest performance summary. You see very consistent as far as drawdown. It hasn't made a worst case drawdown. It's been kind of sideways from this point forward. Let's see, we released this, it was around this time frame, trade somewhere between 600 and 650. So it's up. It hasn't gone up much, but you know, most trading systems, if they're raw trading systems like this, can go sideways for several years, and that's one of the reasons why we have diversity in our trading systems. This is a basic strategy. So a pattern can go sideways for a couple of years. The fact that it's gone sideways and hasn't made a worst case drawdown is a good indication, and we can take a look at implementing this again. You can anticipate it doing well, or you can anticipate you can wait till it makes new equity peaks to trade it. But I want to show you one way to make this better. I've noticed that when we trade a gap fill in reverse, that it does better on the long side if the trend is slightly down, and it does better on the short side if the trend is slightly up. And I can show you that in the code. I'm going to show you the code update to make this slightly better. And we want to say for the trend to be slightly down, we look at the daily bars. We added a daily chart as data 2, and we added this line in here. It was commented out in green. Now I'm adding it. And the average close of the last 12 days is less than the average close of the last 24 days. It's about a month long. There's about 22 to 23 trading days in a month, but we use the standard 12 and 24. So half a month is less than the month down, and then you can take long signals, and if it's up on a half-month basis, then you take short signals. And let's compile this and look at the results. And again, this is freely distributed when you join our email list, and it's also in the book Algorithmic Trading Systems. I want to show you the results now. It's updating. You can see data 2 here at the bottom, and you can add that. You just simply insert the symbol and you add a daily chart of CL, and I'm still waiting for this to update, so I'll pause the video and wait till it updates. So you put the update in, and here is the equity curve. You see the drawdown is lower, and we had minus 5,000. It exceeded minus 5,000 in the last chart, and you see it's much lower more recently, and the equity curve is a little bit stronger. And so let's look at the results on the performance summary. 62,180. The raw strategy is 97,000, and you have less trades here. The drawdowns, max strategy drawdown is a little lower, and the equity curve, here's the equity curve with the drawdown. The trade analysis, total trade analysis, 152 average trade profit, does better on the long side, 167 versus 135. And so this is one way you can trade crude oil against a selective strategy. This book is an educational resource. You can use it as a starting point to learn how to program strategies, develop your own, and so that's why I provide it, and just to show you a little bit of what it takes to develop a good trading system, and that's why I have these books. And so that's the update I wanted to show you with gap fill and reverse crude oil. Again, take a look at it, and you might find it beneficial to your crude oil trading. You could do this on different time frames. You could try to modify some sort of intraday reversal with this as well. And so that once again is the update.